Assalamualaikum, I'm Muhammad Haris. Now I will explain about the corporate misconduct committed by Golden Farm Berhad officers and directors. Golden Palm Berhad broke several important laws under the Companies Act 2016. First, under Section 213, the directors did not do their job properly. They failed to act honestly and didn't make decisions in the best interest of the company. They also didn't show enough care or responsibility in their action. Under Section 210 and 591, there was false accounting. This means the finance team and CFO gave fake financial information. Because of this, under Section 218, the director can be held personally responsible for the company losses. The company also broke other law under the MACC Act Section 17A. Golden Palm Berhad can be punished for bribery done by its staff. Under Capital Market Laws Section 179 and 188, the company also guilty of giving fake information and insider trading. The wrongdoing include bribery through fake vendor contracts, fake financial report, and selling share before bad news came out. Even the internal audit team wasn't independent. They were influenced by the top management. Overall, the root problem was abuse of power by top leaders, no strong internal control, and the board didn't act when they saw a red flag. Welcome back. Now let's look at other similar case to Golden Palm Berhad. First is the 1MDB scandal, which is leaders misuse public fund using fake companies and contract. Second case is Transmile Group. They reported 530 million in fake revenue, and the board didn't act even when red flag were raised. Third case is Dynamic, also fake contract and revenue to trick investor. What do these cases have in common? Corruption from the top, weak internal governance, and fake financial report that hurt investors' trust. From this scandal, we learned that director must always act with honesty, care, and in the company's best interest. Companies need strong internal check and independent audits. Finally, Malaysia needs stronger enforcement and a better corporate culture where wrongdoing is not tolerated. Government isn't just rule, it's about what's right. Okay, that's all for this slide. Thank you.
My name is Sasfa and I will be present a critical analysis of the responsibility and liabilities of external auditor in relation to the Golden Palm Berhad. Golden Palm Berhad, a public listed company involved in agri-business and logistics, was at the center of a major corporate scandal involving the false accounting, insider trading and corruption. While much attention was directed at the director and senior management, the role of the external auditor must be critically examined. Despite numerous warning signs, the audit firm issued unqualified audit option, raising serious concern about professional negligence. Under Section 266 subsequent 1 of the Companies Act 2016, an auditor has a statutory duty to ensure the financial statement to give a true and fair view of the company's financial position. In GPP case, the accounts were clearly manipulated, revenue were overstated, and liabilities were understated. Yet the auditor failed to qualify their opinion. For the Section 266 subsequent 3, require the auditor to determine whether proper accounting records were maintained. At GPP, documents were distinguished, such as vendor payment being labelled as a consultancy fees, and offshore accounts were being hidden. This should have a triggered suspicion and further investigation. The failure to act demonstrates a clear lack of professional skepticism. And more seriously, the section of 266 subsequent 4 impose a duty on the auditor to any report knowledge of fraud or dishonesty of registrar. In GPP's case, the secret account missing stock and insider trading by the director should have been reported immediately. The auditor's silence here represents a potential breach of duty statutory obligation. And lastly, under Section 587, any officer including auditor will knowingly permit the publication of the misleading statement can be held criminally liable, and if it's proven that auditor were aware of the misstatement or intentionally ignore the sign, they may be subject to the legal action, fines, or even imprisonment. And we can draw a comparison from the past scandals such as Transmile Group Berhad, where Deloitte failed to detect inflated revenues, and 1MDB when clean audit report were issued during period of massive fraud. This example highlight the danger of compromises independence and failure to act ethically. In conclusion, the GPP case illustrates a serious breakdown in the responsibility of external auditor under Companies Act.
Good evening, madam. My name is Wee Zu, matric number A23B2524. Today I will be discussing on Golden Palm Berhad, a significant case study on corporate winding up in Malaysia. Introduction. Golden Palm Berhad is a key player in Malaysia agribusiness and logistic industry. However, it has recently come under scrutiny due to winding up orders, primarily because the company is unable to pay its debts. This presentation aims to analyze the legal procedure and implications surrounding this case. Next, legal context. Under Section 4651E of the Company Act 2016, a company can be ordered to wind up if it cannot pay its debt. The definition of insolvency is critical here. A company is considered insolvent if it failed to repay a sum exceeding 10,000 ringgit within 31 days of a written demand. Next, type of winding up. There are two types of winding up. The first one is voluntary and compulsory winding up. Is initiated by the members of or creditor of the company. Why compulsory winding up is court order, typically due to insolvency or action that prejudice creditors. Next, compulsory winding up process. The compulsory winding up process begins with a petition filed in the High Court after a court hearing. If sufficient evidence is presented, a winding up order may be granted. A liquidator is then appointed to oversee the liquidation of asset and repayment of debts. Allegation against Golden Palm Berhad. Golden Palm Berhad faced serious allegation of corporate mismanagement and financial irregularity, including fraud, financial statement, and unrecorded liabilities. This issue contributed significance to its financial distress. Next is the court case, Scomi Group Berhad. Turning to Scomi Group Berhad, this company has been classified as financially distressed since December 2019. It filed for judicial management, claiming unfair prejudice in debt restructuring. The court ruled that public listed companies can apply for judicial management, affirming the rights of secured creditors. Next, the court case of Transmile Group Berhad. In the case of Transmile Group Berhad, the company faced several financial issues and has decided not to pursue lawsuit against former management due to lack of funds. This situation highlights the potential for liquidation as response to ongoing financial distress. In conclusion, the winding up of Golden Palm Berhad underscores the importance of corporate governance and the needs for legal procedure to protect creditors and maintain market integrity. That's all from me. Thank you.
Assalamualaikum, I am Amirul Asfar, number matric A23A2482. Today I will be talking about the role of liquidator in the winding up of a company, especially under Malaysian law. Guided by the Companies Act 2016, this topic is important because a liquidator plays a critical role in handling failed business, protecting creditors, investigating fraud, and ensuring legal surveillance. Who is a liquidator? A liquidator is a person appointed to manage the process of winding up a company, especially when it cannot pay its debts. Liquidator takes full control of the company and is responsible for selling its assets and distributing the money to creditors. Key functions of liquidators, according to Section 8, Division 3 of the Companies Act 2016, the key duties include identifying and collecting all company assets like property, inventory, and bank funds, selling the assets and distributing money in a strict legal order. Secure creditors, preferred creditors, unsecured creditors, shareholders. This is ensure fairness to all parties. Next, investigative role. A liquidator must also examine the company's past transaction. They look out for underpriced deals made to insidious fraudulent preference when where certain creditors were unfairly paid for others, hidden or transfer asset. If such transactions are found, the liquidator can go to the court to reverse them under Section 528 of the Companies Act. Next, reporting crime. If any signs of fraud or criminal behavior are discovered, the liquidator must report it to relevant bodies like the Malaysia Anti-Corruption Commission (MACC), Securities Commission (SC), Royal Malaysian Police (PDRM). This ensures accountability and helps prevent future abuses. Other than that, an international corporation, in some cases, money is hidden overseas. Liquidators can work with forensic accountants, use mutual legal assist relatives, apply to court to freeze or recover foreign assets. Section 486 even allows investigations into subsidiaries involved in fraud or used to hide losses. Case example, Transmill Group. A strong example is the Transmill Group Berhad case. This company faked around 530 million in revenue. When the new CFO spotted problems, the company collapsed. The liquidator found false contracts and underpriced asset sales. They worked with authorities to reclaim money and expose fraud. And another one, case example, 1MDB scandal. Talk 1MDB was not fully wound up. Many subsidiaries were liquidated. Billions were stolen across borders. Investigators from Malaysia and the US work together to trace the money used for buying luxury properties, even financing Hollywood films. Again, liquidator played a role in asset recovery. Procedural Rebina Goodyear. Not all cases involve fraud. In Rebina Goodyear, Berhad 2021, the court ordered winding up because of unpaid around 13 million debt. The liquidator carry out standard duties, collect assets, notify creditors, and distribute funds. This show how the process works in normal cases. So to conclude this, the role of liquidator is not just administrative, but also investigative and legal. They ensure assets are fairly distributed and wrongdoings are exposed. The Companies Act 2016 gives them the tools to carry out this task. Cases like Transmill and 1MDB show how crucial liquidators are in protecting creditors and restoring trust.
Assalamualaikum. My name is Ahmad Irfan Surullah and my matrix number is A23B1336. Now I will present about failure in board governance, management, audit and whistleblower. Let's start by looking at the multiple failure that happened inside Golden Palm Berhad. First is the board failure. The board of directors failed to fulfill their fiduciary duties under Section 213 and 218 of the Companies Act 2016. Instead of protecting the company interests, some directors were involved in insider trading. They used confidential company information to sell shares before bad news was announced. There were also serious conflicts of interest because the board lacked enough independent directors. This allowed the top executive to dominate every decision without proper challenge or oversight. And next is management misconduct. The misconduct didn't stop with the board. The CEO, CFO, and head of procurement abused their position by awarding inflated contracts to vendors in exchange for personal bribes and kickback. These bribes were disguised as so-called consultancy fees. They also falsified the financial statement by overstating revenue and hiding liability to keep the share price high and mislead investors. Next is audit failure. Internally, the audit function was compromised because the internal auditor was also working for the CEO private investment firm. This is a clear conflict of interest and violates the Malaysian Code on Corporate Governance 2021. Externally, the auditor failed in their duty of professionalism skepticism, despite seeing warning signs like inflated revenue and suspicious invoice. They issue clean audit report violating their obligation under the Capital Market and Service Act 2007 and MIA by law. Next is whistleblower weakness. To make matters worse, employees were afraid to report what was happening. There were no strong whistleblowing channels. no anonymity, and no legal protection, violating Section 587 of the Company Act 2016. This allowed the misconduct to continue for several years. We can compare this failure with real-life Malaysian case. In 1MDB, board and management abuse led to one of the biggest corruption scandals globally. In Trustmile, external auditor failed to detect accounting fraud, and in Cyberdynamic, whistleblower conflict and delayed disclosure worsened the collapse. Now governance reform strengthening board oversight and audit quality. After we seen the failure at Golden Palm Berhad, it's clear that stronger reforms are necessary to prevent similar cases. First is board oversight improvement. First, we need to strengthen board oversight. Stricter criteria should be applied when appointing independent directors to ensure they have no close personal or financial ties to management. We also recommend setting tenure limit for independent director to avoid the problem of long-term familiarity, which often lead to weak oversight. In addition, we should establish dedicated risk and audit committee at board level. This committee should consist of members with strong legal and financial expertise who can critically review complex transactions and ensure better monitoring of the company financial health. Next, audit quality improvement. We focus on improving audit quality. The Audit Oversight Board, or AOB, under the Security Commission Malaysia should be granted stronger power to supervise and investigate auditors. To avoid too much conflict between auditors and management, we propose mandatory auditor rotation where audit firms are regularly changed to bring fresh perspective. Another important reform is to ensure that auditor report directly to the independent director, not just to management, so that any critical findings are fully and transparently discussed at board level. Finally, we suggest introducing personal liability for external auditor if they fail to exercise proper professional care. When auditors know they can be held personally accountable for negligence, they will take their responsibility much more seriously. So overall, this reform focus on restoring independence, objectivity, and accountability to both the board and the auditor, because strong check and balance are key to preventing management abuse. Internal control, whistleblower protection, and regulator enforcement. Besides board and audit reform, there are two other areas that need serious improvement: internal control and regulatory enforcement. Internal control. First, company must create secure and anonymous whistleblower channels. Employees should feel safe to report misconduct directly to an independent board committee without fear of retaliation. To encourage early reporting, whistleblowers should be offered legal protection, job security, and even financial reward when they report serious violation. In addition, companies should conduct frequent internal audit and random check to identify early signs of fraud, irregularity, or conflict of interest. Next is regulatory empowerment. Second, we need stronger coordination between regulator. Agencies like the Security Commission Malaysia, Bursa Malaysia, Malaysia Anti-Corruption Commission, and Bank Negara Malaysia must work together, share information, and act quickly when red flags appear. Swift enforcement and public disclosure of enforcement action are critical. When the regulator acts fast and makes action visible, it sends a strong message to the market that misconduct will not be tolerated. At the end of the day, governance is not just about compliance. It's about building a culture of integrity, transparency, and accountability. The Golden Palm Berhad case and similar cases like 1MDB, Trustmile, and Cyberdynamic remind us how important strong governance is to protect investors, employees, and the public. With this reform, Malaysian companies can rebuild confidence, attract responsible investors, and prevent major corporate failure in the future. That's all from us. Thank you.